Hey guys, so I'm back with another video. I just made one, was it last night or the night before? And since then we had some interesting stuff happen, so I wanted to go over a video to cover what we just saw happening and what the possibilities are here, because I'm getting a lot of questions about it. So let's start off with showing you guys that this last candle that we had here on the daily or on whatever time frame you want to look at, it actually slightly got higher than our previous high. So over here, it looks like the high was $6,843, and our last high over here was $6,829. So the fact that this candle actually made a new high here invalidates my original theory of this being a wave 1 down and this being a wave 2 up. So that was one of my primary bear counts that I had us going to 5.2K at that I showed you guys in the last video. And with this movement up above, this wick above the last high, that particular count is technically invalidated. And now I know there's some exchanges where we didn't wick higher, and there's some exchanges that we did wick higher. So it's a little bit of a gray area. But for all intents and purposes, that particular count already looked kind of off because of the length of this wave 2. And so now that we did cross over here, I'm going to go ahead and eliminate that count, which leaves us with the alternate bearish count, which is this one right here, where we're actually in the 4th wave, and we still have the 5th wave down left. So in this particular count, our 4th wave cannot technically go above 7.1K, and with the last high, we reached right under $6.9 thousand. And as I talked to my guys in my Discord group, my free Discord group, as I explained to them, we have the 50 EMA. It's not pictured here, but we have the 50 EMA on the daily, resting right about 6.9K right now. So that was going to be acting as resistance if we managed to go higher. The last time we talked in my prior video, we talked about this particular structure being an ABC, some sort of a flat correction, and we had a slightly different count with this being the A wave and a 3-wave structure, an A, B, and a C, the B wave another A, B, and a C, and then this particular C wave had to be a 5-wave structure. And at that time when I'd made the video, I'd counted as such, with this being a 1, this being a 2, this being a 3, this being a 4, and this being a 5 to finish us off right here. And then I was expecting us to go down. But as you can see, we made the A wave, and then I said there might be a little B wave or a second wave, and then we'll get even lower. But instead, we made a new high here over this particular high. So that kind of messed with the count a little bit. And so I've edited the count for it to make sense now. What I told my guys earlier is that I added some more shorts here in the 6.7 thousand range once we got this spike higher, because based off any counts that I could make, I couldn't see us going any higher than where we are now without some retracement. I was expecting the dip to be right here. Instead, we got another spike in, and I'll show you guys how I accounted for that. But after that, there's literally nothing else I can see that brings us higher. I did say that, I can't remember if I said, but I believe I said that we couldn't go above 6,800 and 6,800 something for this particular count, because at that point the 5th wave would become longer than the 3rd wave. Let's go ahead and check that right now, actually. Let's see here. So we got the 3rd wave projected from the bottom of the 4th wave right here. Yeah, so we actually for this count to be valid, our 5th wave cannot go above $6,864. And as you can see here, we spiked right below it, came down, and then one more spike attempt that was truncated, and we never actually got past this level. So this is my bearish count, A, B, and a 5-wave C, and it's still valid because we never broke 68.60, and that was the actual invalidation point. But let me show you what we got here. So we have a 1, 2, 3, 4. Now this was tricky because initially we had this labeled as such, right? And it looked nice, and it looked like this was the end of it, which is why I had us coming lower. But then we came down, we came up a little bit, and we shot even higher. So the only way that I could really explain this was that this was not actually the 4th wave, but the 4th wave was actually a running flat with an A, B, and then a C wave. And a running flat is going to have a 3-3-5 structure. So something like, if the 3rd wave ended here, this would be 1, 2, 3, 1, 2, 3, and then a 1, 2, 3, or sorry, 1, 2, 3, 4, 5, giving us our 3-3-5 structure. And in a running flat, the fib levels that we're looking for, it actually worked out really well here. So we're looking for, we're looking for a fib extension. The B wave should go above the A wave and tends to be 1.38% of the A wave. Sorry, let me fix that. So we're going to measure our A wave here. And our B wave, as you can see, went up to the 138, went a little bit above it, and then wicked down. So from our A to our B wave, we're a little bit higher than what's ideal, but not too bad. It's a quick wick, so it's okay. And then our C wave measured in comparison to our B wave, let's see here. It's either the B wave or the A wave that we have to measure it against. But let's check what we get here. I believe it's the B wave. So yeah, it looks like it's 90% of the B wave. So our B wave was 138%, slightly more of our A wave, and then our C wave was short of the A wave, and it was 90% of the B wave, which are common fib retracement levels. And for a running flat, all we're looking for here is, in a running flat, is a move, and then a B move that goes above the start of the A move, and then a C move that falls short of the end of the A move. So that's exactly what we got. Let's see here, I'm going to show the waves so you guys can see that. So we had an A, a B that went way above it, and then a C that fell short of it, and that's what we get in a running flat. So running flat as the fourth wave is what I have here, and then we have our fifth wave coming up, and our fifth wave would be fifth wave is actually ending right here. So our fifth wave would be a 1, 2, 3, 4, and then a quick 5. That was a truncated fifth. And so that's how I'm counting this right now. Because we never went over that 6860 level, the fifth wave is in fact shorter than the third, even though it doesn't look like it based on the drawing. Remember, when we measure these things, we're measuring the vertical length. We're not measuring the horizontal length of the wave. We're measuring the vertical length, and the fifth wave has to be shorter. Than the third wave, which is what we got here. So I'm going to take the measurement of the third wave, project it from the end of the fourth wave, and if we scroll up, we can see that as long as the fifth wave stays under 6863, it's going to be shorter than this third wave, which keeps this count valid, and is also why I believe this was our top. And why, actually, I made a Twitter post after we got this spike up as we were coming down, and I said it's possible there's one more spike, but I also said I'm expecting that spike to truncate. If you guys go on my Twitter page, it was posted in the last 24 to 48 hours, and that's exactly what we got. And my reasoning behind that was because I saw 1, 2, 3 waves. I didn't see a fourth and a fifth wave, and this sideways movement looked like a fourth wave, so I was waiting on a fifth, and I said it's possible. And I said if we do get it, though, I'd expect it to truncate because, again, we almost cleared that level here. So if this did not truncate, if it went higher, it's possible it would have invalidated this entire count. So I was thinking if this count is to remain valid, we could see another pop here, but it would have to be a truncated fifth, which looks like exactly what we got here, keeping this A, B, C bearish count valid. So this would signal the end of the fourth wave. Again, if we go to the bigger picture, this is what we're looking at here. We have our extended first, second, shorter third, fourth, and then we have our fifth wave down. And based off of this bearish count, because the third wave is shorter than the first wave, the fifth wave would have to be shorter than the third wave. And if we're to take a measurement of this third wave, and project it from the end of our fourth wave, right here. This is how low our fifth wave can go before it invalidates this count, which is why I have $4,800 as the absolute lowest I would be expecting if this count is correct. So this is my primary bearish count. 4,800 is the lowest I'm expecting before a much larger bounce. I'm not going to show it here, but on the weekly time frames, we have a very strong, very noticeable bullish divergence that's been forming over the last few weeks. So like I've been saying, I've been expecting a giant pop. All I've been saying this last, month or so is that I'm just expecting another wave down because according to my count, we haven't yet completed 5 waves. So I'm acknowledging that there is a bullish divergence, and I'm acknowledging that it's very strong, and I'm acknowledging that it's going to play out. I'm just saying that I'm expecting one more dip first. And if we look at the daily, again, I'm not going to show it here, but if we look at the daily RSI, we do have a hidden bearish divergence forming between the peak in RSI at this level and the peak at RSI in this level. An important thing to keep in mind is that RSI is based on the closes, on the daily closes. So if we look at the daily close between these two levels, this candle closed, the highest close was at 67.56, and our highest close here was at 67.53. So technically, this bar is a little bit lower, which means a lower high in price And on the RSI, actually, let me just show it to you guys to make it easier because it's going to be hard to picture it without me showing it. So let me just pull that up real quick here. I know I'm going off a little bit on tangent, but this wasn't the main purpose of the video, but I just want to explain to you guys what I'm seeing here so it makes a little bit more sense. So yeah, so we have this this peak in RSI, and then we have this peak here. So if we take a trend line, we can see that clearly we're sloping up here, and then on the price, however, we're actually making a lower high, even though it's not too clear here. So lower highs in price, higher highs in RSI, right in the 40 to 60 range, which is a perfect range for hidden divergences to form. So we do still have a valid hidden divergence on the daily. So although we have that really strong bullish divergence on the weekly, I'm showing a hidden on the daily, and I'm expecting one more drop based on my Elliott wave count, which is why I'm confident in saying that I'm expecting one more dip before we get that giant bounce up. So this is the bearish count. I've explained to you guys how my bearish scenario here is still valid and how I believe we reached a top right here for the C wave and how we should be headed down. And so now I'm going to go ahead and talk about the only possible bullish count that I see here. I don't see anything else at this time. And this is one that I've talked about in the past as well, so we're going to go over it one more time. So in the bullish scenario, unlike the bearish one, I have the first wave again extended. I have the second wave. This is going to be our third wave. This was our fourth wave. And we just completed a 1, 2, 3, 4, 5 to complete our fifth wave right about here. And this completes this 5-wave impulse down. And we've now started either an ABC as a corrective wave, an ABC as an X wave, or a new 5-wave impulse, which would be a 1, 2, 3, 4, 5. And this would be the bigger bounce that I was talking about earlier that I said was due. So in the bearish case, we have one more drop until we get the bigger bounce. In the bullish case, we're getting the bigger bounce right now, and this is the first wave of it. So that being said, let's take a look at this bullish count and how I made sense of this one here. Now, right now, the Elliott wave counts are not pretty. Even the bearish count that I just showed you guys, it doesn't look ideal. It doesn't look as nice as I would like it to look as far as a 5-count structure goes. That being said, like, I mean, this isn't pretty, but it doesn't violate all the rules. As far as the 4 dipping into wave 1 territory, it overlaps by a wick. This actual wick didn't even go onto this candle, like into this candle body here. It stayed right above it. If we go on the 1-hour time frame, we see the same thing. Even on the 1-hour time frame, this particular wick stayed right above any of the candle bodies here. So I'm allowing that overlap of the wicks of the 4 and the 1 because no body closed even on the hourly. But even then, it doesn't look pretty as a wave count. None of the wave counts at this moment do, so we have to work with what we got. So back to the bullish scenario, this one doesn't look too pretty either, but we can make it work. Now, keeping in mind if this is a leading diagonal, we're looking for a 3, 3, 3, 3, 3 count. So I'm going to go ahead and just map that out right now. So we have a first wave, clear 3 count. That's the most obvious 3 in this entire structure. Then we have our second wave. We got a 1, 2, and a 3. Then we have our third wave, which is going to be another 3 count. 1, 2, 3. We have our fourth wave, which in this case is also going to be the running flat. So that's going to be our fourth wave. And then we have our fifth wave, which ends up there. So that's the end of our fifth wave, and now we'd be working on our wave 2 or wave B retracement in the bullish case before we head up for a wave C or a wave 3 up again. So in the bullish scenario, this would work. One reason why I'm not too fond of it as a bullish scenario, and honestly I don't know how important this is as far as Elliott wave goes, although in the past I've seen it respected pretty well, and that's in Elliott wave we have 2 contracting trend lines in our leading diagonal. The waves fit in between those trend lines, and ideally, as you know, we know that the fifth and final wave can either overthrow, meaning it breaks above the trend line, or it can undershoot, meaning it falls below the trend line before breaking down for the next wave that follows. So that being said, with this particular count, the reason why I said it's not pretty is because if we take our trend lines and we make them touch, okay, in this case the top of the 1, this bottom trend line touches the bottom of the second, our third trend line touches the top of the third. It's looking good so far, but here we get our fourth trend line, and we notice it actually undershoots the trend line that we're looking at here, right? If we were to move this up to make it touch here, make it touch the bottom of the fourth, then we see that the fifth that the fifth one actually breaks the barrier, breaks a trend line right here, which I wouldn't expect to see in a leading diagonal. I expected to respect that and then bounce up. As you know, the fifth can overshoot or undershoot, but normally that refers to the end of the fifth, not the middle of the fifth. So that's not ideal. So if we were to move this back down, our fourth wave undershoots the trend line, and then our fifth wave, you can say that it spikes up. It doesn't quite. It undershoots as well. It doesn't quite hit the top. And then this is also, I'm taking wicks here. I'm taking bodies here. So if I were to ignore the wicks, then this would look completely different. I mean, if we go body to body, it just doesn't make sense. So we got to take the wicks into consideration here for this to make sense as a leading diagonal, and even then it has some not so pretty wave counts or wave endings here. So that is the bullish count. Still viable, just not as nice as I'd like it to look. But like I said, at this point, nothing's as nice as I'd like it to look, so we're going to have to work with that. So now, assuming that this is the bullish case, in the bearish case, first of all, let's go back to the bearish case. In the bearish case, we've completed our fifth wave here, and we're expecting a very strong drop down. And the drop down will eventually take us below the end of the third wave to, again, as low as 4.08K. And once that drop starts, it's going to be pretty sharp and pretty drastic. And I'll get you guys targets in the bearish count once that drop begins, because we'll know it's happening, because it's going to be pretty strong. So in the bearish case, we're expecting a strong drop down. In the bullish case, however, since we still have to keep this bullish case in mind, we're going to be looking for initial targets here, assuming this was a bullish case. So in the bullish case, we completed our fifth wave here, and we're now starting the wave 2 retracement, which will take the shape of an ABC or some sort of a three-wave structure. It could be an ABC, it could be a flat. And then after that, retracement will go up for our third wave or C wave. So let's just take a quick fib retracement measurement here from our top of our fifth to the bottom of the first wave. Top of the fifth, bottom of the first. And so generally with wave 2s or wave Bs in this case, we'd be looking for an initial target. We could retrace just 23%, but that's very rare. I don't think that's going to happen. So we're going to be looking for an initial target of a 38% retrace, which is going to be the more conservative estimate. And that's going to be right about here. This is going to be the 38% retrace. So if we're looking for that target, we might get, If we're looking for that target, we might get something like an A, B to retest the lost trend line there, and then a C, something like that. Could be. Again, that's very conservative, not what I'm expecting here. I'm more likely expecting something within the 50 to 60% range, or at the bare minimum, this 38% retrace right here. So we'll have to look at the subwaves to kind of get clues about this. But at the bare minimum, we're looking at around 6.4K for the 38% retrace. And a more, what I'd like to see ideally is an even deeper retrace than that. And that's going to get us all the way down to possibly the 68% retrace right here. So this would be my target zone on this next drop. May just close my shorts here because I don't want to be stuck in shorts if this is a bullish scenario and it bounces back up. But we're looking for somewhere between 6.2 to 6.4K on this next drop. And stopping there, holding that 6.3 to 6.4K level, and then going up from there would make me extremely bullish. Especially if we break this swing high, I would be very, very convinced that we're seeing a bullish count here. That being said, if we find resistance here, a little bit of support here, and then we have a weak bounce and we simply break right through, then it's looking a lot more likely to me that we're in the bearish count, in which case we'll be going a lot lower than this last swing low, and we'll eventually reach closer to that 5.4 to 5.5 target that I was talking about initially, or even lower down to the absolute low of the 4.8 target that I have as my absolute low for this bearish count. So this quick video is just to explain to you guys how we saw this erratic movement and what it could mean in the grand scheme of things. Again, we never invalidated my bearish count right here because we stopped short, about $20 short of the invalidation point, so the bearish count is still very valid. And at the same time, I'm not going to eliminate this bullish count just yet. Like I said before, I will only officially eliminate this bullish count if we dip below this last swing low, which is about 57.75. So if we lose 57.75, I'm going to officially throw this bullish count out. Until then, I'm going to keep it as a valid count. I don't want to get overly confident in the bullish count here when we're seeing a lot of, sorry, in the bearish count here when we're seeing a lot of bullish signs on the longer time frames. So we're going to keep this as a possibility here. At the same time, this count looks real good to me, and I'm leaning bearish, even though I do see this bullish count here. So that's a quick little update for you guys. A lot of you guys are wondering what to make of the last spike and how it plays into the larger picture and the grand scheme of things as far as the counts go. Also, guys, I'm going to be posting a link to my Discord group. It's a group we have about, I think, 15 to 1600 members in it right now, where you guys can discuss with each other about the charts. You guys can put out your TA. You guys can ask me questions about your charts. And then overall, it's going to be sort of like an educational Discord group. I want you guys to have a resource to chat with each other, to chat with like-minded traders about what you guys see. As you guys know, I work a full-time job right now. I have my own business, so I'm not always there to give you guys guidance throughout the day, and it's helpful. At least I did find it very helpful when I was first starting to trade, to be able to talk to other traders, to see other perspectives. And a lot of them use different methods. A lot of them don't use Elliott Wave. And so it's a good place to go when you guys want to hear from some other people that are like you, that are trading the same markets as you are, and that are also learning as well. So I'm going to post that link for my Discord in my description here, in my YouTube description here. If you guys are interested, feel free to join. Just hit the link, create an account, and you guys can join a community of about 1,600 traders. Started it about a week ago only, and it's growing really rapidly. So I'll post that link there. Again, if you guys have any questions, you can reach out to me on my Discord, and you guys can also reach out to me on Twitter and on YouTube. As always, if you enjoyed the video, please like, subscribe, and share with your friends. Thanks.